a massive sum. He would organize a group of wealthy merchants to lend the government £1.2 million. That's about 300 million in today's money. A massive sum. But here's the innovation. The loan would never be repaid. Instead, the government would pay interest forever, 8% annually. And to manage this arrangement, Patterson proposed creating a new institution, the Bank of England. The mechanics were revolutionary. The merchant lenders would give their gold to the Bank of England. The bank would lend it to the government. The government would pay interest annually from tax revenue. And the bank would pay that interest to the merchant lenders. But here's the critical detail. The government wouldn't repay the principal, ever. The loan was permanent. Why would merchants accept this? Because the interest payment was guaranteed by Parliament. It was backed by the government's taxing power. As long as England could tax its citizens, the interest would flow. And the banknotes the lenders received in exchange for their gold could be traded. They were as good as money, better than money, because they paid interest. Parliament approved Patterson's scheme in 1694. The Bank of England was chartered. The merchants provided their gold. The government got its war funding. And for the first time in history, national debt became permanent. Not a problem to solve, a feature of the system. And here's what nobody explains about why this was brilliant for the bankers. The government paid 8% interest annually on £1.2 million. That's £96,000 per year, forever. The merchants had essentially bought an annuity from the government. As long as England existed, as long as it could tax, the money flowed. And if they wanted their gold back, they could sell the banknotes to someone else. The debt was transferable but never repayable. But Patterson's real genius was what came next. The Bank of England was given the right to issue banknotes backed by the government's debt. They could print paper money up to the value of the loan. This created money out of debt. The government's IOU became currency. And the more the government borrowed, the more money could be created. This is the template. Government borrows, never repays principal, pays interest forever. And the debt itself becomes money. It's brilliant if you're a banker. Catastrophic if you're a taxpayer. Because you're paying interest on debt that will never disappear. Within 50 years, every major European power copied the model. France created the Banque Générale. The Netherlands already had sophisticated banking, but formalized government debt issuance. And by 1790, the newly independent United States adopted the same system. Alexander Hamilton, who we talked about before, explicitly modeled America's financial system on the Bank of England, permanent debt, interest paid from taxes, bonds traded as currency. Patterson died in 1719, not particularly wealthy, despite creating the Bank of England. But the system he built persists 331 years later. The Bank of England still exists. British government debt has never been paid off. It's been refinanced, rolled over, and expanded, but never eliminated. The debt trap was set in 1694, and every government since has walked into it willingly. By the early 1800s, European governments had embraced debt. They borrowed for wars, for infrastructure, for operating expenses. But there was no organized market. Each loan was negotiated individually. Interest rates varied wildly, and only the wealthiest merchants could participate. Nathan Rothschild changed that. He industrialized sovereign debt. The Rothschild family started as money changers and traders in Frankfurt. By 1800, the 5 Rothschild brothers had established banking houses in 5 major European cities: London, Paris, Frankfurt, Vienna, Naples. This network was unprecedented. They could move money across borders faster than anyone else, and they used this to dominate sovereign debt issuance. Nathan Rothschild in London was the strategic genius. During the Napoleonic Wars, Nathan arranged loans for Britain, but his innovation was how he structured them. Instead of lending directly to the government, he bought government bonds at a discount and resold them to investors at a markup. He created a secondary market. Government needed money. Rothschild provided it immediately. Then he sold the bonds to pension funds, insurance companies, and wealthy individuals. The government got its money fast. Rothschild collected the spread. And investors got a tradable asset. But here's where it gets darker. Rothschild didn't just finance governments. He positioned himself so governments had no choice but to use him. In 1815, at the Battle of Waterloo, Nathan Rothschild famously learned of Napoleon's defeat before anyone else in London. His courier network was faster than official channels. He used this information to manipulate the bond market. First, he sold British bonds, signaling that Britain was losing. Prices collapsed. Other investors panicked and sold. Then, after prices crashed, Rothschild bought massive quantities at rock-bottom prices. When news of British victory arrived the next day, bond prices surged. Rothschild made millions, not from insider trading as we'd call it today, but from controlling information and market timing. This established the Rothschild model. Control the information, control the issuance, control the market. By 1820, the Rothschilds dominated European sovereign debt. If a government needed to borrow, they went through the Rothschilds, because the Rothschilds controlled the investor network. They had the distribution, and they set the terms. Here's why this matters for the debt trap. Before Rothschild, governments could theoretically refuse to pay. If a king defaulted, his creditors lost money and the system reset. But Rothschild made sovereign debt tradable across borders. A British bond might be owned by a French investor who sold it to a German bank who used it as collateral for a loan to an Austrian aristocrat. The web of ownership became so complex that defaulting wasn't just refusing one creditor. It was collapsing an entire international financial network. This is the Rothschild innovation. Make debt so interconnected that default becomes impossible. Not because governments are responsible, because default would trigger systemic collapse. Governments became trapped. They had to keep paying. And they had to keep borrowing to pay the interest on old debts. The debt trap was no longer just permanent. It was inescapable. The Rothschild family wealth peaked in the mid-1800s. They were the richest family in the world, richer than any king, and that wealth came from one source, interest on sovereign debt. They didn't produce anything, didn't build anything. They lent money to governments and collected interest forever. The system Patterson created in 1694, Rothschild industrialized by 1815, and every government in Europe was caught.